Welcome back to the Dividend Diplomats YouTube channel, guys. You got your boys here. We're still rocking here this Thursday night, August 8th. Your favorite dividend investors, guys. And we're going to bring a nice, iconic, global, worldwide company that you love, maybe your parents love, your grandparents love, your kids love, your grandkids love, guys. Remember, this is all about investing, not for now, not just for tomorrow, but for decades and generations to come. And this stock has stood the test of time, Bert.
That's right. So smash that subscribe button. Give this video a thumbs up. Help us get to 20,000 subscribers. We appreciate it, guys. Like we said in the last video, I'm we had a little tornado rip here through Cleveland, so I have I have two working lights in my house right now. I'm sitting on one of them. I'm on my kitchen floor, recording this video. So hopefully it's the last time you see me with this door in the background. And I better have freaking power by the time we're back. So everybody, thanks for hanging tight with us, especially as we're working through these last two videos in these
If you hear
circumstances.
if you hear some toilet flushing in the background, you probably know what door that leads to.
Yes, yeah, that is definitely my bathroom right behind me there. But I've got a light above me, and that's all that matters right now. So we talk about long-term stocks. This company we're going to talk about today doesn't get any more.
Someone send Bert some natty daddies.
Please no, please no. That's not what we need right now.
Ice cold natty daddy.
Yes. All right. Well, this company, one of the first. This company's been around forever. Let's just call it what it is. They were leaders what from when they started and they expanded their global empire. Some of the best intellectual property out there, some of the best theme parks out there, Lanny. And this company just released earnings in. It was a fun earnings release indeed for this stock.
Yeah, guys, you already know it. We're talking about Disney stock, ticker symbol DIS. They just released earnings on August 7th, yesterday, the day before that we're recording this. They had great results,
Mhm.
overall with some key metrics, especially compared to prior periods. A
Oh,
lot
yeah.
of big bullet points were hitting the headlines within their earnings release.
Yeah.
But revenue increased all the way to 23 billion this quarter.
Yeah, it beat earnings estimates by pretty handily too. It was very solid. And what they saw was the entertainment revenue beat as well. So you had 10.5 billion of entertainment revenue, making up a huge chunk of that. Laney, they didn't just beat on the top line, did they? They also beat on the bottom line too. The adjusted EPS was $1.39. It beat the consensus estimate by 20 cents. They were only expecting $1.19.
Yeah. And the $1.39 is up from $1.03 in the prior year linked quarter as well.
Beautiful.
And on top of that, again, net income is 3.1 billion, before taxes. So yeah, everything is looking great. I mean, they've had a lot of monster movie hits as well in the theater. And Inside Out 2 is huge. I'm
Yep.
pretty sure it's still out there earning revenue as we record this. The guidance and outlook is very interesting.
Mhm.
Uh, I think because they are saving on cost quite candidly right now. Correct me if I'm wrong there, Bert.
Mhm.
Um, and they're beyond their previously stated targets as well on the cost saving structure. Personally, I side more into that, conservative cost cutting, mentality. So I really like when companies do at or better than what they set out to do. So that's awesome. They expect growth, in the upcoming quarters in Disney Plus. So you gotta love that they expect continued growth in the subscription department, Bert.
Yeah, and that was the part too that Disney really seemed to crush it. They continue to see those Disney Plus subscribers grow, and yes, they are expecting it too. Total worldwide subscribers are over 153 million, and compared to last year at this time, it was 146 million. So they're seeing some pretty strong year-over-year growth, 5%. Domestic speaking, it's 55, about 55 million subscribers, up from 46 in the link period last year. So 19% domestic Disney Plus subscribers. The interesting thing I think with Disney though is now what they're doing is they're growing ESPN subscribers, they're growing Hulu subscribers, but they're also trying to merge them all into one too. They're trying to create one bundle so people are just buying one product. You're not splitting amongst three different apps anymore to go to Disney, Hulu, and eventually ESPN will fold into it. You get it all in one spot, especially when you log into Disney Plus. It would be huge for them to consolidate that down.
Yeah, yeah. I mean, because when you consolidate, you probably can save some dollars as well, create some additional synergies. I know the big concern now going forward is the parks, is the theme
Mhm.
parks, is what used to tie in, significant revenue for Disney. It seems like overall consumer products, revenue from parks and experiences was up versus the same period prior, but the operating income was actually down a few percent right now. So it seems like there's, as Bert and I were talking, a little bit trouble in the waters within the theme
Mhm.
parks at Disney. But I mean, I know people at work that probably go to Disney at least one. If not, I know somebody who goes a few different times per year to
People
Disney. They
love
even
it.
have a pass to Disney.
People love it. They will spend a lot of money to go down there. The question is, you have your people, like the person you work with, that's the cult follower that will go all the time. But what about those people when their dollars are stretched, when the consumer sentiment starts to decrease, when they don't have as much disposable income, they're on the fence. I think those are the people you're really nervous about losing for Disney. The people that pop in and out, not your regular spenders. They're always going to be there through good times and bad.
Yeah. But let's get back to the bright side. Free cash flow was up
Hmm.
about 3 billion from the same 9 month period last year to this year. And what has that done to the stock price though, guys? Well, the stock price is actually down 11%, down almost 12% last month, down 5+% this year, down 38% over the last 5 years. The stock is actually trading at $85.96. The stock's getting beat up because of it.
Yeah. So there's one thing to do here, Lanny. Let's run them through our screener. Those three metrics, the PE ratio, that payout ratio, history of increasing divvies, and then lastly, that bonus metric, the dividend yield.
Again, guys, if you haven't, definitely like this video. Show Bert some love here as he pushes through with no, literally running on a hotspot with two light bulbs working, running off of probably some power banks right now, charging his equipment right now. So, but let's get in, guys. All right, Disney stock. Are you guys buying the stock? Let's check out the metrics. 85.96, forward earnings 479. We're looking at an just under 18 PE ratio for Disney.
Yeah, and they just returned that dividend famously this year. That was one of the big things that came back to for Disney. Their annual dividend's 90 cents. So that gives them a very low payout ratio of 18.9%. A nice conservative dividend return for Disney and still plenty of room to keep growing that in future years. They're not peaking out right out of the gate.
It's interesting. They just returned that dividend. But
Mhm.
what's interesting is they returned it to the, yeah, what was it, 30 cents, I believe. And they already increased it up to 45 cents for their, they pay semi-annually. So keep that in mind, everybody. So they're already resuming back to some sort of growth pattern to that dividend. You gotta love it. But yeah, the yielding now is over 1%, 1.05% for Disney stock.
Yep. Yeah, so they're working their way back to dividend stock. Their 5-year yield's what 1.25%. That factors in the time they didn't pay a dividend. So maybe not necessarily where they were, but they're making some progress as they're going backwards. So I mean, they're getting the dividend back up there. So hey, good things to come for Disney. They're making some moves, they're restructuring, they're working through it. To your point, Lanny, this year they're down 5%. Last 5 years, they have not done a great job returning shareholder value. In fact, they've lost it. They're down 38% over the last 5 years. So they're in the midst of a turnaround story.
Or, I mean, I know your children love Disney. I know you guys watch Disney Plus, have plenty of Disney things. I know my toddler loves Disney. Um, you know, elements of Disney, Toy Story obviously is a big hit here in the household over here. What price would get you to buy Disney stock right now?
No, it's a good question. Um, Probably.
75,
Oh yeah,
80?
I mean it's not in the close enough for a buy zone yet. I'd have to see it drop at least below 80, and then I'd really start considering it on the watch list and seeing where I'd want to enter. But right now at 85, just a 1% yield, it's a little rich for my liking.
A little rich for Bert's liking, guys. Question is, are you guys buying Disney stock out there? I'd be curious in the 70s as well. I'd be much more interested with the PE coming a little bit down, yield coming a little bit higher. So I think there is a little bit of risk there just with how much they invest and own of the theme parks.
Mhm.
So let us know in the comments. Are you guys buying the stock? What other stocks to buy right now are out there that are on your guys' stock watch list as we all keep investing, adding dividend income and getting to that financial freedom, guys. Let's build that passive income, baby.
Yeah, if you haven't already, subscribe, give this video a thumbs up, and remember, you're either with us or you're against us, Jack.
That was Bert, the Hurt Locker, and Lanny from the Dividend Diplomats. Over and out.